The stock of Alibaba is getting pounded. I made a previous video on Alibaba, and our good friend Charlie Munger has been buying the stock of Alibaba at a much higher price before. He bought at a lower price, and the stock price continues to get pounded. So in today's video, I'm going to talk about Alibaba and whether I think it's a good buy at these levels. If you're new to this channel, my name is Mariusz Skonieczny. I run Microcap Explosions, a private membership website dedicated to microcap stocks which are underfollowed and ignored by the investment industry. I also wrote 10 books on investing, one of which is available for a free download at microcapexplosions.com. I also created valueinvestinguniversity.com, which is a free resource to make you a more intelligent investor. I find it fascinating to watch people talk or trade, invest in stocks like Alibaba. Alibaba is a giant e-commerce company in China, and the stock has been getting pounded. The stock is down more than 70% from its high of like 300, and now it's trading well below 100. And another thing that I find interesting about this huge decline is how a big company like this can decline so much. 70% is a serious decline. And the same people that see this decline, or the same people that were invested in a stock like this, are the same people that will tell you to stay away from small cap companies, stay away from microcap stocks, because they're volatile, they can go down a lot, you can lose a lot of money. While a company this big, this established, can get hammered 70%. So why is this happening? Well, first, the decline was happening because of the concerns in that China is going to, break up the tech companies, regulate them, make them grow slower, and all that. And now we have the Russian and Ukraine situation that puts China in a bad light. And on top of it, now you have SEC talking about how there's fears or possibility of delisting some Chinese companies from the US exchanges. And so there's all these fears going on. And Alibaba as a business is profitable. It's growing. Per the most recent quarterly report, it is growing its users. It is growing its revenues, not as fast as before, only about 10% revenue growth. Free cash flow is about $40 billion. And the stock is trading for less than 300 million market cap. More specifically, the stock is trading for almost 200 million market cap. It's approaching that. And about 30% of the market cap is in cash, because they have about 70 million of cash in the bank. If you're a value investor, you have to look at that, right? If we take out the 75 million of cash in the bank and we deduct it from the market cap, that's 160 million. And if we compare 160 to about 40 billion of free cash flow, it's trading like 4 times. 4 times. When the company went public and it was growing, it was trading at a ridiculous valuation to the profits, to revenues, at a ridiculous valuation. And people had no problem paying a huge multiple because the business was growing. Now they're afraid to buy a business because it's going to get delisted. It might get delisted from the West. Who cares about US? Like, they're not going to get delisted from everywhere. They're going to, just because they don't, there's a fear of not trading in the US, doesn't mean the company's not going to trade somewhere else. But because of these fears, they don't want to buy a growing company. And remember how so many times I talk about how it's so ridiculous to say that there's growth stocks and there is value stocks. I always say growth is a variable in value. When something grows faster, it is more valuable. When it grows slower, it is less valuable. But just because something doesn't grow doesn't mean it's worthless. I mean, think about an apartment building. How fast are the revenues of an apartment building growing? Assuming it's fully occupied. They're not growing at all. They're growing mostly with inflation, right? They might grow if there is a big influx of people into an area and the population growth is bigger than the supply of housing, then yeah, you can have revenues of an apartment growing. But if things are stable, the revenues of an apartment building are just going to grow with inflation. Okay? So does this make an apartment building worthless? No. So just because something doesn't grow doesn't mean it's worthless. Now, what's interesting about Alibaba is that the growth is slower, but it is still growing. Yet, the stock is trading as if it wasn't growing. The stock is trading as if it was shrinking because of the fears that are out there. And I'm not saying that those fears are dumb or stupid. I'm not saying that at all. All I'm saying is that as a business, Alibaba is a fantastic business. And if I am looking at a business and I'm looking at the fundamentals, I'm looking at profits, I'm looking at growth, I'm looking at what's in the bank, I like the price. I like the price tag of Alibaba in relation to those fundamentals. Now, if there was no fear, negativity around China, Russia, all of the listing, delisting, you wouldn't have the opportunity. You would have zero chance of getting that quality of a business for that kind of price. Zero chance. Okay? When everybody is happy, there are no concerns, there is a zero chance that you can buy Alibaba for the price that is being offered today. So, if you're looking at something like Alibaba, you have to ask yourself, I mean, what is it that you're buying? You're buying a business. So you have to have an opinion on that business. Do you like the business? Do you think it's going to continue growing? Do you think it's going to go under? Do you think the business is going to be bigger in 3-5 years from now? If you do, then you got to be buying it. If you do, this is going to happen, then it doesn't matter if the shares are not trading in the US. None of that matters. If you think that the situation in Russia, the concerns over regulation in China are not going to impact that business that much, then in 3-5 years from now, the stock is most likely going to be higher than what it is today. But now, with that being said, that doesn't mean it can't go lower. When I made a video on Alibaba, the stock was at over 100 bucks. I think it was like at 110, 113, something like that. As I'm making this video now, the stock is at 86. Can the stock go to 50? Can the stock go to trade at cash? Can the market cap be 75 million even though they have 75 million in the bank? Absolutely. Like, fear and uncertainty can make people sell stocks at prices that don't necessarily make sense. I mean, look at some of the Russian companies. What happened to those stock prices? Even though, they might be selling oil and gas and they still have clients, they're still making money, all of those stocks got absolutely hammered, okay? So, for good or for bad, like, this is what happened. So the fear itself can drive the stock price to any level. There is no downside protection to as low as the stock can go. However, if the business keeps performing the way it's performing, if the business does well, I guarantee you that the stock price will recover. Obviously, that's why some of you are investing in Alibaba. And some of you might think that the business will be so negatively impacted by those fears that's why you're not touching it. That's why it's not white and black. But as I said in the previous video, usually when there's so much negativity surrounding a particular company, usually the fear is overblown. And right now I can't tell you if it is or not. But if I was forced to make a decision, buy or sell Alibaba, and that was the only two choices, I would be buying. What do you think?